China has us and that we look like idiots and we've done it wrong. You can't count anybody out in this scenario. So, I mean, look, Bessent has 35 years, he likes to bring that up, of being on Wall Street, but I think that this was more of a collaborative effort than people realize. Can it last for a long time? The president's mercurial. I don't think he wanted people, he said last night he was for Main Street, not for Wall Street. Main Street has 401ks and they have IRAs, and if he's for Main Street, well, then he's done pretty well. Yeah. But I would just point out that the narrative change says you don't want to short a bad market with this president, and you don't want to get out. You just stay the course. That's the right thing to do. Bulls make money, bears make money, and pigs get slaughtered. And in this case, the shorts were the pigs.
They were, Jim. I mean, on the political side, the Bessent thing, the Navarro thing, we'll move that.
We don't know.
I don't know, but I will say that there does appear to be some infighting at the top, and I don't care about the politics, Jim. I'm just curious about where this.
Why don't we care? We want to make money. We don't want to lose money. If it's Navarro, if it's Lutnick, who cares? We're never going to know. We're not going to be in the room.
Fair enough. I think it goes to where trade policy may end up. But let me ask you this: United Airlines, okay? I'm looking now at my screen. United Airlines is up 27% right now. I mean, it's still up over 6 months. It collapsed and it's come back. Has the fundamental business case for people getting on an airplane changed that dramatically in a day? This is the kind of stuff I don't know.
Delta had good numbers. I thought Delta was going to be awful. Delta had good numbers. Their single biggest raw cost, fuel. So they're going to do much better. I mean, fuel's falling apart here. I know that Chevron bounced back, blah, blah, blah. But, so you have two big positives. One was that Delta was really good. And second is fuel goes down. Now, these are volatile trading vehicles, and they're very excitable. And people get, it was cut in half. But it is important for people to recognize that when fuel goes down, it makes up for some of the people who don't show up in planes. The oil companies. I mean, I guess people got short them at the end. You know what, Brian, there's so much money being made by the shorts that they really, really decided that they had their way. And it turns out that was a mistaken way to approach making money.
All right. On that note, Jim, if you'll just stand by for just a second, let's get back to Eamon Javers. He's got more color about how exactly this all went down. Eamon, what can you tell us?
Yeah, Kelly, we're just trying to understand exactly the decision-making here at the White House when all of this was decided. You heard Scott Bessent just a short time ago at the West Wing door, and what the Treasury Secretary said was, and this was driven by the president's strategy. He said he and I had a long talk on Sunday, and this was his strategy all along. To me, that indicated that the decision to reverse these tariffs was made on Sunday, but that is not the case according to Caroline Leavitt, the White House press secretary, who I just spoke to just a couple of moments ago in the West Wing. What she says is the decision to reverse course on these tariffs happened in the Oval Office today during a meeting with high-level officials and the President of the United States, and they hammered out the language of this Truth Social post in that meeting, and there was no decision back on Sunday that this was going to be the playbook, that in fact it was all decided today shortly before that post went out to the world. So what we're looking at with that social media post is sort of a near real-time view into presidential decision making. She didn't offer any details on who was in the room with the president when he made that decision, or sort of why this decision was made today. We did hear Scott Bessent, the Treasury Secretary, saying that it wasn't due to the bond market, which moved dramatically overnight. But so we'll have to wait and see if the president offers any more explanation for that. We're going to see him possibly a couple of times today. There's an event with race car drivers here at the White House. He might take some time out to talk about it there. Caroline Leavitt telling me that the president is very excited to talk to the world about this. So we may hear from him shortly.
And we heard from him this morning. We've heard from him a few times.
He said bye. He said bye.
Bye.
I mean, Jim Cramer, the president, this morning said basically he told us, sort of tipped his hand on what to do. I think he said buy the market this morning.
It's very kind. It was kind of contemporaneous when I was talking with David about how it would really be great if he would just say he'd buy the market, which was good. I would tell you that he's attuned to the media, but what matters is that the press secretary, my understanding is that's exactly what happened. And they were very heartened about the number of people that came to the table. They felt that they did have the Chinese encircled. They decided to press their bet. They went from being looking like they were off base to recognizing that maybe they had a pretty good situation going, and they struck. I also think that there are enough people in that room who recognize that the shorts were having their way and actually think like that. Remember, these are people who are pretty seasoned. I mean, Secretary Ludwig's pretty seasoned. Secretary Best is pretty seasoned. They really get it. And look, I know Peter Navarro. He's one of the people. He's a volatile guy. I know Peter for a very, very long time. He gets it too. So it's entirely possible that what you're looking at was something that came together when they realized that, wait a second, we got 75 countries that say we see eye to eye, and we've got one that doesn't. Well, let's just isolate the one that doesn't and make them look like they're just bad actors. And they succeeded. So, I don't know. I mean, it worked. Look, if you're a bull, this was a good day. Don't outthink it. Stop thinking about the damn bond market. Look, I love the bond market. The bond market's moved like a couple of nano basis. And yet that's all we focused on. Come on, we got to focus on helping people make money. That's what we do. We're not hedge fund people talking about a basis trade. We're trying to help people make money. And when we help people make money, tell them to stay in the game when there's total despair. Tell them not to quit. Tell them not to short. Tell them to get off leverage and let it play out. But stop confusing people with the damn basis trade. We are not on a trading desk. That is not our goal. We are not trying to get a job with Stanley Druckenmiller.
Jim, that was
not yet.
It's all about Main Street. Main Street.
Not the last I looked, there's more people on Main Street than there are hedge funds. You know? I mean, maybe that's why we're niche.
But you heard my comment earlier, Jim, and we got Michelle Cruiser-Cabrera joining us.
Love her.
Here as well. I love her too, but we got her, Jim. She's on our set.
She's the best.
So
she's common sense.
You heard me say earlier, whatever you take away from today, this is a lesson in not trying to time the frickin' market. If you're talking about the Main Street trader, they're not a trader. They're an investor.
There's 7 days a year that make all the performance. We know that over and over again. 7 days. 7 days. So you can get out now, and you can send me an invitation to your funeral. I'll just enjoy it by staying the course. And I got to run, but, I got to go try. I'm trying to get a job with, with Pershing Circle, whatever it is. All right? Let me go get that job.
Yeah,
I need that.
Bill Ackman is very pleased about this. He's,
that's right.
Showering praise all around.
Jim with the rhombus,
dynamite guy.
Pershing rhombus. It's a geometry.
Right. I got to get a job. I got to get a job with Zuckerberg too. Let's see what he's up to. I'm going to do Guap. And then, by the way, I'm using Perplexity now. It tells me that I should try to I can send my resume to David Solomon. Where's he? I'll talk to you guys later.
We'll see you on Mad Money tonight.
Love you.
Michelle just got back from China.
Literally came straight from the airport.
I mean, and lost in all of this, all the euphoria today is that those China tariffs now get us. And let's even paint the bigger picture now of what everybody's talking about. The Oceanic Federation. That now did you hear what Mark Rowan said this morning on Squawk Box? He said the U.S. and Mexico could become the new U.S. and China, basically. I mean, people are thinking this through on a cosmic level now, is trying to isolate the Chinese. So anyway, curious your response.
Yeah, so I was there for the last 2.5 weeks. I was traveling with a foreign policy delegation, and we met with government officials, business leaders, students, journalists, etc. And look, I think the Chinese were extremely surprised at the ferocity that they faced in the tariffs, because leading up to the announcement, they had viewed Trump's second term is very different than the first term. In the first term, they were top of the list, day one, China, China, China. His second term, they're like, wait a minute, he's focused on the border, he's focused on immigration, he's putting tariffs on China, on Canada and Mexico. They kind of felt like they had faded into the background.
That was absolutely the narrative.
So they were clearly very, very surprised. Economically, they know the best answer would be to do nothing. Politically, they cannot do that, in their eyes. And so this is why we have this state of escalation that
Did they come up with nothing else? I mean, other than this continued escalation?
They have been sent the message that the most important thing to the president when it comes to China is them stopping the shipment of precursor chemicals of fentanyl to cartels in Mexico. And they claim that they have done what they can, that they've done a lot, that they'd like to work with the administration, but they are also not sure that that's what he really means. Maybe the administration just wants to contain China, and this is the way it's going to be.
I know we got DeWardrick McNeil of Longview Global is joining us as well. We still got David Waddell and Associates here on set with us, kind of get that bird's eye view. DeWardrick, your take on the last 24 hours, because I'm out of questions. So where do we go from here?
Well, I think Michelle hit on some of this. I think there was a hope, Brian, that the Chinese and the U.S. could come together and try and negotiate a settlement, try to use the phase one trade deal as a baseline to come to a negotiated settlement. But I want to be clear here, Brian, the Chinese have actually been preparing for this eventual outcome if it were to be the way that it is today. So they have put in place a number of tools that they did not have in 2018 to try and fight back. As you know, it won't be symmetrical. They export about $500 billion to us, about $100 billion coming in from us to them. So there cannot be a tariff to tariff, dollar for dollar, tit for tat with China. But it's going to be a total economic war, as I call it, Brian. And our companies are going to be on the front lines here. Many of them that's dependent on China. They will be targeted.
Georgia, in our conversations with government officials, this is a Chatham House rule, so I'm going to be partly vague here, but they tried to put on this face that they were ready for Trump 2. They had already been through Trump 1. It's hard to believe because you bring up the key numbers, which are they're an export economy. And this country is going to tax their exports dramatically, and that's going to hurt them a lot. And it remains to be seen just how much they can take.
I think that's a good point, Michelle. I will say, though, that today's announcement to remove the reciprocal tariffs on places like Vietnam, quite frankly, may help China because depending on what the negotiations between the U.S. and Vietnam is over these next 90 days or so, that still leaves an open border where goods can flow south and you can still try and game this a little bit on just the trade side with China. But again, I want to stress, there are going to be other things that's not based on just trade that the Chinese will try to do. But I think, Michelle, they would have liked to have negotiated, to be fair. I mean, they're going to fight back for as long as they can, but there is this deep asymmetry. But I don't expect that China will fold quickly. You will recall, Michelle, it was 20 months during 2018 of a tit for tat before we finally got to the phase one trade deal. So I think we still have a lot left to play here over what I'm calling the Great Trade War of 2025.
Is there any color you guys would add about what was happening in the Treasury market and like the extent to which they could or would or might or ever shall affect upwards our bond yields?
So we got mixed messages on the currency. There was this talk that perhaps, currency is the tool they have, right? We let the currency float very freely. They control the currency. And there was some talks that maybe they wouldn't let the currency depreciate, which would make the tariffs less effective. Maybe they would actually keep the currency where it is or actually let it appreciate and therefore make the U.S. consumer actually feel the pain and try to force the hand of the president. But I think we've seen the action in the last few days is they've gone the path of least resistance, which is to allow the currency to depreciate and offset the impact of the taxes. That's of the tariffs. That's what they did during Trump 1, by the way, almost entirely.
And I hear David, I hear Jim's points about don't try, we're talking about the basis trade on CNBC and time value and value at risk and all this other stuff that we know because we live this and we talk about every day. I totally get that point. And I think, CNBC stands for Consumer News and Business Channel, not the Stock Market Channel. So your clients, some of them, I think, might be looking to sell into this rally, right? Like they're down, they've made a little bit of money back today. What's your advice on how to approach a day like this?
Because I got to take a break and I got a call. So for the clients, the way
that 12 and a half minutes left of the show. Give us the 12 and a half minutes. We appreciate it.
Yeah, I can do that. So my view of it is, again, the asset allocation has been set, right? We, as discretionary managers, de-risk the portfolios a little bit coming into this year because there was so much policy uncertainty, right? Then you get the downdraft in the market. The question is, what do you do with that? The way you make lemonade out of the lemons is you do a little tax trading, right? So if you've got positions that are down, you can sell them, you can harvest the losses, but you reposition in the same asset allocation as you had otherwise. And again, a lot of our clients are still generating capital, right? So cash builds up in a little bit of a reservoir. The way that we've been telling them to deploy that capital is when we get to sentiment extremes, because this is a sentiment-driven market, not a fundamentals-driven market. So if the bullish sentiment on the AAI gets below 20%, we buy. We put some money to work, and we use those sentiment extremes as opportunities. And, this is a great snapback here, and Jim mentioned it. This is longs coming in. This is also shorts covering. To what degree, to what proportion, I don't really know. Is this over? It's not. It feels super good right now, but there's going to be more back and forth, and China's going to have something to say either subtly or publicly. So the volatility is here. We have to figure out ways to use it until we get to clarity.
And Michelle, I'll call on your knowledge, not as someone who just got back from China, but also somebody who sat on this side of the desk for years. I want to make something very clear, too. We're talking about tax losses and stuff. The S&P 500 is up 90% in the last 5 years. Okay,
nice.
I just want to point that out. Like, it's been a rough week. But if you bought a year ago, you're probably flat to down. But if you bought 5 years ago, you're still way up. I just want to make that point because it's easy to forget. Michelle, we've lived through a lot of these markets in turmoil specials.
Yes.
Right? And they're all very scary, but that's, I think, a guest we had on earlier this week, Peter Mallouk, made this point. This is why you get paid in the stock market, because there is risk. Things do go down.
Oh, yeah, absolutely.
All the time.
Yeah. If you have been well diversified, you've actually done okay. If
you're like 40% up in bonds, you're probably breaking even right now.
Exactly. I mean, if you were long Nvidia and long the Mag 7, okay, you're feeling a lot of pain. But if you had discipline and you said, you know what, I'm never going to let one position get larger than 1 or 2% of my portfolio, and you were consistently trimming, even though it's painful to trim a winner, isn't it? It's just, you want to kill yourself, but you got to do it because
I don't know. We're not allowed to own stocks.
That's right.
Michelle,
I am now.
As you are now, but we're not. You get my point.
I feel it much more viscerally now that I'm allowed to own a portfolio. It's fantastic. But someday.
Hold on, that's important. How has that changed your thinking? We can't own stocks.
Oh, I know. It's
our family doesn't own stocks.
It's almost more interesting. It's much more interesting. It's so much more. It's so much every single day. By the way, I also help manage an endowment for a nonprofit, and you think about these things all the time as well, and how to balance, and then worrying about stocks and bonds went up together for decades. They can go down together at the same time. So diversification gets tricky when you're worried about those kind of things.
Well, I think you're right, Brian, to zoom out a little bit. We are in the midst of a technological transformation. So even if, and I know what the models say, if there's a 10% tariff, then we subtract 0.4% off of GDP. If productivity growth is going to be 2% or so, and we hold labor force somewhat constant, you're starting at a 2% level. So even if we deduct, 0.5% for tariffs, I'm not saying that's the case, even if we do, there's still GDP growth there, and all of this productivity coming into companies makes them more profitable, so we expected profit margins to rise. Now, tariffs may offset some of that, but we are in a special period of time where technology is the really big story. This stuff is sad as it may sound, I think nibbling around the edges. I think we're in a very prosperous period of time. We don't need policy to run amok, but the base case is prosperity here.
There's still a lot of confusion as well about these actual tariff rates. Dvorak, just as an example, if that's more about the U.S. and Canada, is it 10%? Is it 20%? It does depend exactly on who's in and who's out. But Dvorak, do you think there's something bigger going on here where the U.S. is trying to actually bring together a coalition of nations contra China?
I think that was certainly the clearly articulated plan during the Biden administration. I thought it was the right approach. You've heard me say that on air many, many times. I think starting it this way, meaning you would target everyone and then back off and say, well, now we're going to target China, provides a lot of uncertainty and whiplash for our trading partners. And so I'm not sure that our trading partners over these next 90 days have been done any favors. They are now going to try and figure out how to hedge on both sides, because I'm not sure they can trust the U.S. or the Chinese for that matter. So I don't think it's been made any easier on them in terms of negotiations. Think about Vietnam, for example. how do you close that back door? What's negotiable? What's not? And I think coming back to Michelle's point about China, it is very important to make clear to the Chinese what your goals are. That's the only way we're going to figure out whether or not these things are negotiable. Fentanyl and the precursors there, I think that's absolutely something that China can do more on, and it's negotiable. Trying to change China structurally, I don't think so.
I just worry. So I'm gonna get myself in trouble with this comment, Michelle. There's a point in a boy's life where maybe you have to get into a schoolyard fight, right? And your parents could say, "Son, don't fight." But if you do get into a fight, hit back, right? Don't just take the punches. Xi Jinping has had a terrible life. If you look at his life history, he lived in a cave at one point. The guy's had a
He went
form.
through the Cultural Revolution.
He went to the cultural. His parents were ripped away, and tomato. Yeah, he's. And I just worry. I do worry that between these two gentlemen, President Trump and President Xi Jinping, neither one of them is going to be the guy that walks away. And if we get this schoolyard fight, you hit me, I hit you harder, I hit you. Somebody picks up a chair. Where does this end? How does this? Is any one of these gentlemen able to walk away from a fight?
Yeah, so now you're asking about human nature, right?
Yeah.
Which is difficult. I would say the other side of that coin is you have two people who could actually talk to each other, right? This is there is the potential here. I think one of the things that I discovered over there is that they're confused about the lack